You've probably noticed the biggest problem with most trend indicators: they tend to give signals way too late. By the time they finally flash an entry, the price move has nearly finished. That's exactly why what I'm about to show you is so important. Take a look at this example. The indicator pinpointed the exact moment the trend switched direction. No delays, no lagging, just clear profitability. And here's another instance, and yet another one, all aligning perfectly. But don't go anywhere just yet, because there's even more to uncover. This special tool doesn't only detect trends, it also offers 3 distinct methods to capitalize on them. Best of all, it truly works. In this video, we're exploring the Zero Lag Trend Signals Indicator, created by AlgoAlpha. I'll walk you through its core features and then share 3 highly effective strategies you can put into action right away. Let's dive in. Start by opening TradingView and choosing any chart you're interested in. For demonstration, on the 15-minute time frame. Next, go to Indicators, type Zero Lag Trend Signals, and pick the one by AlgoAlpha. Unlike standard trend indicators that lag behind price movement, this one forecasts where price action is likely headed, hence the name Zero Lag. No more waiting around for slow-moving averages. What sets it apart? There's a color-changing trend ribbon, red for bearish conditions, green for bullish ones. But the real game changer is the presence of arrows. A green arrow signals an upward turn in the trend. A red arrow indicates a downward shift. Even the small arrows on the ribbon itself carry meaning. They highlight pullbacks, giving you a second chance to hop on a trend if you missed the initial surge. In a bullish trend, for instance, when price dips to the ribbon and rebounds, a small green arrow appears as your trigger. Still, blindly trading every arrow can be disastrous. You need more robust tools that help you pinpoint high probability opportunities, manage risks effectively, and filter out low-quality setups. That's where our free resource comes in, providing optimized targets, volume insights, and additional filters. You can grab it via the first link in the description. A feature many traders overlook is that this indicator works across multiple timeframes. You don't just get signals from the 15-minute chart, you see simultaneous information from the 5-minute, 1-hour, 4-hour, and daily charts as well. It's basically 5 indicators combined into one. In the settings, you'll see a length parameter that controls sensitivity. Lower values generate more signals and more noise, while higher values produce fewer but more reliable signals. The band multiplier determines how wide the ribbon appears. Wider settings cut down on false signals, while narrower settings allow for more trade entries. Now for the 3 trading strategies. 1. Trend reversals. Wait for the large arrows, green for long positions, red for short positions. Then check the multiple time frame display. If all shown time frames agree with that arrow, it's a strong entry signal. Place your stop loss just below the ribbon for longs or just above it for shorts, and aim for a take profit level at about 1.5 times your risk. When everything aligns, the probability of success is significantly higher. 2. Pullbacks. This approach is my personal favorite. Stick to minor arrows that appear only when they match the broader trend. For instance, if the ribbon is green, you look for small green arrows during pullbacks. Confirm the ribbon is green, watch for price to dip back to the ribbon, then bounce. That's when a mini green arrow pops up as your cue. Again, check the higher time frames, 1 hour, 4 hours, and daily, to ensure they're also bullish. Place your stop loss beneath the latest swing low, set a take profit at roughly 1.5 times that distance, and let the trend carry you along, like catching a train at the station rather than chasing it on the tracks. 3. Momentum confirmation. Here's where the real power lies. You add the momentum bias index to confirm your zero lag signals. Whether it's a large arrow or a mini arrow, once you see it, glance at the momentum bias index. You're looking for a bright green histogram, not the darker green, that closes above its dotted threshold for a long trade. If it matches up with your zero lag arrow, that's a high probability setup. Place your stop loss near the signal candle, but you can comfortably aim for a 2-to-1 reward to risk ratio because these setups tend to reach their targets more often. For short trades, the logic is reversed. Look for bright red bars above the dotted line and a red arrow on the chart. These steps offer a layered system of confirmation, so you're never relying on a single indicator alone. However, settings are crucial. The exact parameters will vary depending on the market you trade. For Forex, a length of 80 and a band multiplier of 3.0 work well to eliminate noise and capture genuine moves. Keep the momentum bias index on the close price with a length of 50 and threshold levels at 5, 10 and 30. Set the multiplier to 1. For crypto, however, you'll want to bring the length down to about 10 and the band multiplier to around 1.5. Also, as a pro tip, go into the Style tab and disable the bullish or bearish entry boxes. The rest of the momentum bias index parameters can stay the same as they effectively cater to both Forex and crypto markets. Why such distinct settings? It's straightforward. Forex markets often require heavier filtering to avoid whipsaws, whereas crypto markets can move dramatically and rapidly, so you need to catch trends early. Whichever you choose, jump on TradingView and test each strategy with a demo account. Try them all and see which aligns best with your personal approach to trading. That brings us to the end of this video. If you found these tips useful, be sure to hit that like button and subscribe for more real-world trading strategies. Have any suggestions or want to explore additional indicators? Let me know in the comments. Thanks for tuning in, and I'll catch you in the next one.